try to please take the running notes. It's something that is very important. This is what you need to study for the examination. So nature, timing, and extent of the audit report procedures performed. This is what is generally that is there in the audit documentation. What is the work I have done, to what extent I have done, at what point of time I have done, what are the audit procedures I have applied, what is the observations I have obtained, and what is the conclusions derived from it. So the observations and conclusions derived. So this becomes the content generally. The content of dinner. What is the work you have done? The nature, timing, and extent of the actual audit work that you have done, and then the observations or conclusions that you have derived out of it. In any other case, there may be some rare cases where there may arise an instance, or there may be a case where a specific form of legal conclusion might have been applied by the auditor. For a very small example, let's say when you are calculating gratuity, should a service include the notice period or not? Is a general question. What if the last working day is before the notice period? What if the last working day is after the notice period? In these cases, is he required to be paid till the resignation date, or is he required to be paid till the notice period date? So all this is a legal thing, or there are a lot of conclusions on this. There is not a standard conclusion outside in the world. You can pay gratuity till the notice period. You can pay gratuity till the resignation date only. There is a lot of confusion regarding this. What exactly constitutes the service? Whether it is just the last date of resignation, or should the gratuity be paid up to the notice period? Because when we are talking about gratuity in India, let's say there is you have to pay it once all the 5 years are complete, right? 5 continuous years of service. So now let us say the person has resigned before 5 years, but if you include the notice period, it is going beyond 5 years. So now there comes a question whether he should be paid gratuity or not. The notice period is exceeding the 5 years, but if you see the designation date, it is before the 5 years. So in those cases, whether the person should get the gratuity or not. So these things are something that are very specific to that particular area, that judgmental area, that audit area. So whether in those instances, what is the logic that you have considered? What is the basis that you have considered? What is the thought process that you have applied at that point of time? Andradhu vandu, it is better if you document it, because future la vandu idu ஞாபகம் இருக்காம இருக்கிறதுக்கு வாய்ப்பு இருக்கு. So there is this requirement to document whatever any significant deviations or judgments you have made at that point of time. In that case, when you make that judgment, or when you document that judgment, it will basically help in any future evaluations or any future references. You can write significant professional judgment அப்படின்னு எழுதுங்க. Whether a particular tax section is applicable, whether a particular tax deduction is applicable, whether a particular Companies Act provision is applicable. All these things they become very critical at that point of time. Whether based on that, your audit observation and your audit report might change, isn't it? So at that point of time, what is the logic that you have applied? What is the decision that you have taken? இது வந்து it is a professional judgment. As a chartered accountant, you are eligible to take your own decision. So and that is the whole point of giving a chartered accountancy degree, because the ICA says, I trust your professional capability, so you go ahead and carry out the audits. So as a chartered accountant, in your professional capacity, you are eligible for carrying out those professional judgments, and you can take your own stand. There is nothing wrong with it. So in those cases where a different stand is taken from the regular point of view or regular perspective, it is always safer to document that. Significant professional judgments or any significant matters. Significant matters, na? Maybe say something that has come to light, like going concern has been a question. BSNL, few years ago, there was a question over the going concern of the entity itself. So even the auditor has given a disclaimer in the audit report saying we are not sure about the going concern of the entity. Disclaimer maybe some 6 years back I'm talking about. So this is also a significant matter, because significant matter is a point of discussion which is sometimes critical to the audit evidences or audit report. So significant matters under the one, it could be anything with respect to the entity or the organization. Significant professional judgment under the one, what is your decision with respect to that matter? So matter is the subject matter, and professional judgment is your or a chartered accountant's judgment against that particular matter. So what should be forming part of the audit documentation? Abdina, first thing, nature, timing, and extent of the audit procedures. That is, what is the actual work you have done? What is the actual audit that you have done? After that, once you have done the audit, what is the observation? What is the conclusion derived out of it? Further, what is the significant matters that were discussed, and what is your professional judgment against those significant matters? This is what generally forms part of the audit documentation. This is what Daddy is telling everyone, boss. This is what is expected out of your audit documentation. Please make a note. Even if you want to think from the perspective of what is going to be the what factors are going to affect the audit documentation, அன்றதும் ஒரு question வரலாம். Factors affecting audit documentation. Then you just need to think about the 4 points that we have given. It's the same thing you can write here also. Based on the nature, timing, and extent of audit procedures that you have performed, naturally the audit documentation will also differ. If you have performed more procedures, there will be more documentation. If the scope is more, there will be more documentation. If the scope is less, there will be less documentation. So what factor is affecting the audit documentation? The actual audit procedure carried out by you. That is one thing. And then second thing you can think of is the size of the organization. Organization size, the entity that you are auditing. If it is a small entity, naturally documentation will be less. But if it is a large scale entity, naturally the number of documents that you are dealing with might be higher. Might. There is only a possibility that it might be higher. Next, what other factors could affect our data? Again, it's all based on the audit procedures that we have performed, audit methodologies that we have considered. What is the way in which we have taken the sample size, the way in which we have actually carried out the audit work. This is what is the major factor that is affecting. And then the other factors could also include the professional judgment that was taken. What was the basis for the professional judgment? Based on that, you may need to do some actual additional documentation. You may need to get some legal advice, all that stuff for arriving at that professional judgment. So this can also affect the audit documentation, or to what size it can go, to how many pages you have to document, what is the documentation that must be done. All this depends upon the professional judgment as well. So the same thing, just add one more point called as organization size. So this factor also affects the audit documentation. What should be there inside the audit documentation? Your actual audit and observations, conclusions. Any extra or matters that need significance, or matters that need significant attention of the auditor, they are called significant matters. And any judgment made against them becomes significant professional judgment. These are keywords. Just note down. Nature, timing, and extent of audit procedures is a keyword. Significant matters is a keyword. Significant professional judgment is a keyword. So what factors can affect the audit documentation, Abdina? It is naturally the size of the organization and the actual audit procedures that you are carried out. There is one small point with respect to this standard, which is specific documentation. Based on the situation or based on the nature of the audit that we are carrying out, there may be a requirement for specific documentation. For small sized firms or small sized companies, this may not be required. But when you're coming to a large organization, large MNC or a listed entity, there may be certain disclosures or certain documents that you need to get from the management. So all this is actually discussed in various other standards on auditing. So I will not discuss anything here. The specific document is always subject to what kind of entity we are auditing and what is the nature of the audit we are doing. So everything is discussed about this in other standards also as and when required. So here it is not much required to be discussed, but if you get any specific documentation questions, you just think of the other standards that we are going to study. Something like written representations, communication 265, communication with those charged with governance, and say 580 written representations. So like this, say 700 series, there is audit reports. So all this specific documentation purely depends upon what is required for that particular point of time or audit. Now let us come back to the textbook. Most of what I have covered is basically from the textbook itself. I have summarized most of it. But there are certain things that we need to discuss from the textbook as well. So let me share the screen. Okay, and this is one point that this is page number 3.13. Please open that. 3.13. So yesterday I was telling you that audit evidence should be sufficient and appropriate. There are two ways in which you can assess whether the documentation or evidence that you have got. The evidence, basically, when if you remember, the evidence is the document that is given by the client to us, isn't it? So when you're talking about the evidence, what tells you whether that evidence is enough or not? There are two characteristics that is expected out of it. One is sufficiency. The another one is appropriateness. What is sufficiency? What is appropriateness? Simply speaking, it is quantity and quality. The documentation that you have made, is it enough quantity? What is quantity? Quantity is the number of pages or the number of observations or the number of documents that you have got to against that particular observation. Is it enough? What is quality? Whether even though it is 100-page document, is it actually explaining anything about the observation that you are trying to project, the audit that you are trying to carry out? There are two measures. That is, one is sufficiency and appropriateness, quantity and quality. Let's see how do they define sufficiency, the quantity. Take a look at this. They say there are three things that could affect the sufficiency. Quantity under the it could get affected by three things. One is materiality. Second thing is risk of material misstatement. Third is size and characteristic of the population. What is materiality? Yesterday I have discussed this with you. Materiality under it keeps changing from firm to firm. But what is that speed that is dangerous for you? Some people say it is 60, some people say 40, some people say 30, some people say 90, some people will say 120 also. So it is purely dependent upon the individual. What is the risky number for them? Anything beyond that starts becoming risky for that particular person. Similarly, for an organization also, regular lifestyle because their lifestyle supports it. So their materiality level is different from another person, from another Tata, from another Billa, or from a regular common man, isn't it? Each and every single person has their own materiality level, the level beyond which things will start getting a little riskier. Okay, so this materiality level is required to be identified because you know that this is where things get a little risky. So you need to be careful. Below that, you can freely spend or you can safely do that experimentation. But beyond that, if you go, it may be a little constraint on the pocket, isn't it? So there must be adequate approval, there must be adequate documentation, everything when things start crossing the materiality threshold. That is the reason they keep highlighting this particular aspect called materiality. A company has, let's say, 100 lakhs worth of sales, and now 100 lakhs worth of sale, and now they are buying a car for the owner worth 40 lakhs. Now just imagine your sales is 100 lakhs and you are buying a car worth of 40 lakhs. What is the whole point of running the organization? There is nothing left for anyone else to get also. You cannot even repay your suppliers because most of the times it will be at least 80 percentage of the cost will be for the suppliers only. So when your cost itself is around 80 lakhs, what is the whole point of spending a 40 lakh amount, isn't it? So you need to keep a threshold and say that, boss, beyond this it will start becoming risky for you. So don't try to spend anything beyond this number without adequate approvals or documentation. Okay. So sufficiency. So if the materiality level is anything below the materiality level, you will not require much documentation. But if the point that you are verifying or the area that you are verifying is crossing the materiality level, then you may need some additional documentation. Then there is risk of material misstatement. There is risk of material misstatement. We will come to it in essay 315, but anyways, I will help you get a generalized picture. Now, there are two interesting aspects here. One is inherent risk, and then there is control risk. Now, I want you to carefully remember this. Think of inherent risk like what you are doing when you're riding a bike or riding on the highway or riding on the road. You take all the precautions. Want to start on time, you maintain your speed limit, you have all the documents that you want, you have taken adequate precautions, you are following all the roads rules and regulations, you are following all the road safety protocols, you are ensuring there is adequate petrol in the bike, you are giving signals, everything you are doing. But in spite of all of this, is there a guarantee that nothing will happen to you? Is there a guarantee? Can you give it in writing saying nothing will happen to me? There is absolutely no risk at all. அப்படின guarantee கொடுக்க முடியுமா அப்படினா no. You cannot give that guarantee because when you are by riding something on the road, it is not just you. There are hundreds of people outside and anything anyone can do, isn't it? The risk can come from you or the risk can come from others. So even if you take care, the risk is still there because there are others who might affect you, isn't it? That is what is the inherent risk. What is inherent risk to a human life? Death is the very inherent risk to a human life. The day you are born, there is going to be death. This is part of the life itself. This is what is called as inherent risk. When you are starting some process, when you are having a petty cash, the very inherent risk is that it might be lost or stolen, or it might be mismanaged. This is something that comes by default along with that process. If there is no petty cash, there was no risk of stealing that money. But petty cash is needed. Petty cash cannot be avoided. It is much required for more. Every organization needs petty cash. And when you have petty cash, there is always this inherent risk. There is always this inherent risk that it might be stolen or mismanaged. So what do you do? What do you do? You put some controls in place. You put some procedures and policies in place to ensure that even if it is not completely eradicated, you can at least reduce that risk. The risk that is given to you by others, you cannot control them. But if you are in your control, if you are in your speed limits, if you are following the rules and regulations, if you are taking the precaution from your end, you can at least reduce the risk to a significantly low level. You can at least say, okay, boss, I am driving safely, I am maintaining the distance, I am taking all the precautions. So at least from my perspective, I'm at least reducing the risk to the maximum level possible. If anything is happening from the outside, I will still be in a position to manage it because I am taking all these precautions. I'm trying to react according to the situation. அப்படின்னு சொல்லிட்டு you are trying to establish through the controls in place. The petty cash, when you are trying to issue a petty cash, there must be a documentation, there must be a receipt signature, there must be an approval from the finance manager. Every day there must be a physical count and you must note down in a register. Every month in a month, physical petty cash verification reconciliation must happen. So all these are basically controls. Control abdina, it could be a verification, it could be a documentation, it could be a reconciliation, it could be a signature, it could be an approval. Anything and everything that is happening inside an organization to reduce the risk to a very low level is called as a control. When you are starting any process, there is a very inherent risk that is coming associated with that process. Every single process is like that. When you are starting a manufacturing process, there is a very natural probability that you might overproduce, you might underproduce, you might have very high abnormal losses. All these are very inherent. If you did not start that manufacturing process, there was no possibility of loss at all. அப்படின்னு சொல்லிட்டு அந்த லாஸ் இருக்காது அப்படின்னு சொல்லிட்டு யூ டோன்ட் சிட் அலோன் ஐடல் இல்லையா. You try to do something. When you are trying to study, there is a possibility that you may not understand the subject. Just because of that, you don't stop studying இல்லையா. You try to start. By when even if you start, there are inherently some issues that are going to come. You may get bored, you may not understand the subject, you may not be appreciating the subject, it may not be your favorite subject. These are all by default there along with the subject, isn't it? தேவையில்லாம தெரியாம இந்த சிஏ கோர்ஸ்குள்ள வந்துட்டீங்க, இதெல்லாம் வந்து இட் இஸ் இன்ஹரண்ட் ரிஸ்க். நவ் there is nothing you can do about it at this point. You have already jumped into the deep waters. Now the only thing that you can do is focus on the control. Focus on the control. You try to put a fixed scenario, fixed schedule to your life. You try to have a target, you try to have a goal. You try to establish saying, okay, if there is any query, I will try to talk to this particular faculty, at least get these doubts resolved, so that yeah, if not this, maybe it will help me boost my confidence towards the subject or confidence towards some other subject. Idellame vande, it is all controls. Anything and everything that you are trying to do to reduce that inherent risk is basically a control. So what is the risk of material misstatement abdina? Every process has some possibility of something or the other going wrong. The misstatement is what is something going wrong. What is actual is not represented in the same manner in the financial statements. That is misstatement. Petty cash is 10,000 rupees, but only 9,500 is reported. That is a misstatement. But is it material? That is the question here. Is it material? If an organization of 10,000 crores is, we are talking about an organization of 10,000 crores and saying 500 rupees is the difference in petty cash, no person will bother about you. Okay, because it is not material for them or not material for anyone. Now, let's say the organization is a 10,000 crore organization and the petty cash limit is 1 lakh rupees. Okay, per month there is a 1 lakh rupee petty cash limit. Now, in that petty cash, let's say 10,000 rupees is missing. For 10% of 1 lakh rupees is it still a material amount, isn't it? The materiality you need to understand can differ from the item to item also. For fixed assets, you can have a different materiality level. For petty cash, you can have a different materiality level. For liabilities, you can have a different materiality level. For inventory, you can have a different materiality level. Individually, for the items of the financial statements, you can have different materiality levels, as well as overall organization level also you can establish one materiality level. So misstatement is basically what can go wrong with respect to that particular item in the financial statements and whether it is material. There is a risk of something material going wrong in the financial statements, and it happens because of two possibilities. One is because of the very inherent risk of that process. By default, by having petty cash, there is a possibility that there may be some misappropriation or wrong calculation, something associated with that. But to reduce that inherent risk, you have these controls in place. Someone is reviewing, someone is approving, someone is verifying, someone is reconciling all these aspects, reduce that risk to a very low level. But if the control itself is not working, if the manager himself is involved, if the person who is verifying, the person who is reconciling himself is also involved in this whole gamble, abdina, the control has failed and the risk remains, isn't it? The control has failed and the risk remains. That is what is the risk of material misstatement. If the material misstatement is significant or material, then you need to do more documentation. If the material risk of material misstatement is lower, then you need to do less documentation. This is with respect to quantity wise. Next comes the size of population. Naturally, based on the sample size that you have taken, more documents might be needed or less documents might be needed. Sample size, we have a specific standard for this, talking about the sampling. Audit sampling under ஒரு தனி standard இருக்கு. It's a very interesting one. We will come to that. So these are the three aspects that are affecting the sufficiency of a audit evidence. What is that? First, materiality. Second, the risk of misstatement arising on account of a misstatement. The risk of material misstatement, that is a misstatement or something wrong happening in the financial statement, it must be always material for you to discuss with anyone outsider. Okay, எனக்கு 1 rupee போச்சு அப்படின்னு சொல்லிட்டு if you are feeling bad for the whole day, even your friend will scold you. Because for 1 rupee, if you are thinking so much, just imagine what will happen if you think for 100 rupees அப்படின்னு சொல்லுவோம், isn't it? So people don't have time to care about the small matters. They want to talk about big things that are affecting the organization. Here also, recently it so happened that we were discussing something about some 4.5 million recovery, and one manager was like, sir, there is 132,000 that is also pending. The CEO got so angry. He was like, I'm talking about 4.5 millions. It is 45 lakh. Okay. I'm talking about 45 lakhs and you're coming up with the example of a 32,000, isn't it? So based on the context, you need to really understand that materiality plays a significant role. You need to understand that the big numbers have a bigger impact, isn't it? Small numbers are there just to assess whether it is going to have a significant impact. But the big numbers is what really affects. Now, this is where the question is, what is a big number? That is purely the judgment of that chartered accountant. That is what is called as a materiality level. What is big and what is applicable for that organization? The chartered accountant can decide according to his professional judgment. Now that is the materiality. Then there is risk of material misstatement, and then finally the sample size. These are the three factors that have an effect on the sufficiency. How much quantity of audit evidence is required? How much quantity of audit evidence is required? That is basically your sufficiency. Next comes the appropriateness. Appropriateness is the quality அப்படின்னா when you are asking for a physical verification of petty cash, you should get a report called as physical verification of petty cash. That is quality. What you have asked for and what they have provided is the exact requirement. If they are giving you some inventory physical verification, if they are giving you some bank physical verification, something else, then there is no point because it doesn't match the requirement that you have and the document that they have given is not a match. And this has happened multiple times during the audits that I have seen. One CFO was involved in some wrongdoing, and we were asking him about some inventory report. He gave some very random reply about something else, talking about global scenario, all that stuff. So the CA directly took this to the management and said, "See, boss, I'm trying to do my job within the least possible period of time, and this guy is causing a lot of trouble for me. The head of the finance itself is causing a lot of trouble for me. I'm asking something, he's giving something else. This has been happening from the start of the audit. We are not getting any relevant documentation. So help me with it." அப்படின்னு சொல்லிட்டு management கிட்ட போனா management took a left and right for the CFO. Now, what is relevant must be the document that you should receive. Otherwise, will you be able to do the correct audit? No, naturally not, isn't it? So appropriateness under the one, what is the query that you have, what is the area that you are auditing, and what is the documentation that they are giving. It should match your requirements. That is the quality. So one is quantity, another is quality. And here, with respect to SA 330, they say the SA 330 requires the auditor to conclude whether sufficient appropriate audit evidence has been obtained. Sufficient appropriate audit evidence is a keyword. Whenever there is anything that is coming, query the question that is coming with respect to audit documentation, you need to use words like this: sufficient appropriate audit evidence. This is one single keyword. You cannot simply say audit evidence. You have to always mention in the examination as sufficient appropriate audit evidence. Okay, see again, whether to conclude whether sufficient appropriate audit evidence has been obtained, he has to document saying whether the sufficient appropriate audit evidence has been obtained for to achieve what? To reduce audit risk to an acceptably low level and thereby enable the auditor to draw reasonable conclusions. That's what I said. There is an inherent risk to everything that happens in the organization. So when you get the audit documentation, the controls will reduce the risk to a acceptably low level. We cannot say that there will not be any risk. Everyone accepts that there is going to be some risk when doing the business. But at least because of all the documentation, because of all the evidences that we have collected, at least we have a satisfaction that yes, boss, to the maximum extent, they are trying their best and there is least amount of losses possible for the organization based on their current structure and operations. Okay. So as to enable the auditor to draw a reasonable conclusion, enable the auditor to draw a reasonable conclusion on which to base the auditor's opinion. So when you get the sufficient appropriate audit evidence, you have a satisfaction that yes, the risk has been reduced to a suitably low level. So I have a comfort that I can give the true and fair opinion on these financial statements. That is what is the use of sufficient appropriate audit evidence. Now, next is something called as sources of audit evidence. Sources, I have already told you, anything like any paper could be a audit evidence. The invoice, agreement, contract, internal communications, email communications, reconciliations, internal reports, MIS, what else? Physical verification, vouchers, anything. It could be a audit documentation. Next, audit procedures to obtain audit evidence. It is basically what is the audit that you do. It will anyways be covered in SA 500 series. Next, audit procedures. Audit procedures, let us not handle it here. Okay. Let us not start with this audit procedures to audit evidence. This will all come in SA 500 series. Okay, all this will come in SA 500 series. So I will do one thing. I'll discuss something called as management assertions. Okay. So most of us are naturally clueless when we go to an audit, isn't it? Even now, with the audit that you are doing, can you really explain why you are there? What is expected out of you? What you have to do? If I ask you to verify something, will you be able to do it with 100% confidence? Most of the times, the answer is no. And we won't accept it ourselves, but that is the reality that we don't know what we are doing. I was literally very clueless for the first 1.5 year of audit. I was absolutely not sure what I'm doing, where I'm going. After that, it became a routine. ஒரு பழக்கம் ஆயிடுச்சு. ஓகே, இங்க போகணும், இந்த டாக்குமெண்ட் கேட்கணும், இந்த ரிப்போர்ட் தரணும், இந்த காப்பி பேஸ்ட் பண்ணிட்டு, இங்க கட் பேஸ்ட் பண்ணிட்டு இது கொடுக்கணும் அப்படின்றது வந்து it has become one process for me. அவ்வளவுதான். But if you really try to understand what is actually to be done, there is a guidance for everything that ICA is given. There is a big daddy behind you who is telling you, boss, this is what you have to do. Okay. And daddy is telling you, when you are auditing the financial statements, there are certain things you need to keep in mind. When you are auditing the financial statements, there are certain things that you need to keep in mind. It doesn't matter what kind of audit it is. I have felt this is really applicable most of the times for any kind of audit. When you are touching anything, you need to have these things in mind. If you have these things in mind, it will at least give you a confidence saying that yes, I have covered the to the maximum extent possible. So what are management assertions? Management assertions under one for any and every accounting entry that is being posted, there are a certain list of checks that you can do to ensure or to say or to conclude that this accounting entry has been posted correctly. How do you say that an accounting entry has been posted correctly? அதுக்கு வந்து certain parameters உண்டு. What are they? அப்படின்னா, that is what are called as the management assertions. These management assertions will help you in establishing the fact that the accounting entry has been posted correctly. அது என்னது? கீழே வாங்க. Look at this. Listen carefully here. First one, they talk about classes of transactions and events. Word romba perusa irukku. It is a key word, but it simply means profit and loss account. Account balances abdina simply means balance sheet. Presentation and disclosure abdina simply means the notes to accounts and the financial statements on the format ellame. Okay, so these are the three things that they give you guidelines about, and this is what is actually the financial statements. You have the P&L, you have the balance sheet. This is what is the basis. The cash flow is a concept that is not coming from accounts, it is coming from financial management. Adanala they will not talk about anything about that, but the presentation of those financial statements is again coming from accounts only, the accounting standard only. Adanala these assertions also talk about that. So let's see. First, classes of transactions and events அப்படின்னா profit and loss oda item ஒன்னு இருக்கு. Let's say there is a income entry that is being posted. Some ex customer to sales. ஒரு entry போட்டிருக்கோம். Now, there are 5 things that you can check against that entry to ensure that it is correct. The accounting entry is correct or not அன்றதுக்கு வந்து there are 5 checks you can do அப்படின்றாங்க. First one, occurrence. Whether it has actually occurred or not. எப்படி கண்டுபிடிக்க முடியும்? ஒரு சேல் டாக்குமெண்ட் இருக்கணும், isn't it? For you, what is the basis? ஒரு சேல் டாக்குமெண்ட் இருக்கணும். இன்னும் கொஞ்சம் டீப்பா போகணுமா, ஒரு டெலிவரி ஆர்டர் இருக்கணும், isn't it? அந்த டெலிவரி ஆர்டருக்கு மேல கஸ்டமர் வந்து நான் ரிசீவ் பண்ணேன் அப்படின்னு சொல்லிட்டு ஒரு சைன் தரணும். So this will give you a guarantee that this transaction has actually occurred or not, isn't it? This is occurrence. அதே வந்து parallel இந்த பக்கம் வாங்க, எக்ஸ்பென்ஸ்க்கு வாங்க. எக்ஸ்பென்ஸ்ல what is the proof of occurrence? You have a invoice, purchase invoice இருக்கும், isn't it? அந்த எக்ஸ்பென்ஸ்க்கு வந்து every expense should have a tax invoice against that. இன்னொன்னு என்ன செக் பண்ணலாம், whether the payment has gone or not. நம்ம பேங்க்ல அந்த பேமெண்ட் போயிருக்கு அப்படின்னா you will have an electronic record இல்லையா? Yeah, the invoice amount and this amount is matching. Yes, so this expense has actually occurred அன்றது வந்து நம்மளுக்கு ஒரு கான்ஃபிடன்ஸ் வரும். So that is basically the occurrence. Whether this transaction has actually happened or not அன்றது வந்து அந்த basic documentation நம்ம பார்க்கணும். That is the reason for everything we ask the document. First, tax invoice. The tax invoice, whether it is sales or purchase, the tax invoice forms the basis. So depending upon the nature of the transaction that you are looking, income transaction அப்படின்னா, along with the sales invoice, you may also ask for the delivery note. Delivery note மேல customer sign பண்ணா, it is a confirmation for us saying yes. Okay, customer himself has signed, so it is guaranteed that this transaction has actually happened. Now, completeness. Any idea what is completeness? Completeness அன்றது வந்து when you are recording any transaction, have you recorded the full amount or not? Have you recorded all the details that are required to be recorded about that transaction or not? இதுதான் completeness. One is amount, one is details. Amount. அங்க வந்து சேல்ஸ் இன்வாய்ஸ்ல பிஃபோர் டாக்ஸ் இவ்வளோ அமௌண்ட், டாக்ஸ் இவ்வளோ அமௌண்ட், full amount, total gross amount வந்து இவ்வளோ அப்படின்னு சொல்லிட்டு இருக்கு. But when you are checking the account and entry, they are posting only half of it, or they are posting only partial amount of it. ஏன் அப்படின்னு கேட்டா சார் half தான் வந்திருக்கு அப்படின்னு சொல்றது, இதெல்லாமே வந்து you need to be careful about it. So you need to see whether the invoice amount and the amount that is recorded in the books is the same or not. That becomes the completeness. Okay, completeness could be with respect to the amount, or like I said, it could be with respect to the details. Details அப்படின்னா the details with respect to that sale transaction, ஏதாவது specific ஆன issues like this delivery to be made with delivery charges, அந்த மாதிரி details எல்லாம் நோட் பண்றது, இதெல்லாமே வந்து completeness. So basically completeness, just remember about the amount. First is occurrence, there should be some document. Second is completeness, whether the amount has been recorded correctly or not, amount and the details have been recorded correctly or not. Third thing is accuracy. Accuracy andradhu vandu whether it has been recorded in the books in under the appropriate accounting head or not. Under the appropriate accounting head or not. Ipo when we are talking about a cash sale, cash to sales is the appropriate accounting entry. But when you are doing a credit sale, the creditor to the customer to the to sales is the more appropriate accounting entry. So accuracy andradhu vandu you're talking about what is the appropriate accounting heads. Cut off vandu time. If sale transaction has happened on 31st March, but the delivery was happening later on, ipo what is the cut-off period for this? Under which period the tax should be paid? For this, you need to refer to the taxation laws. They give you a specific set of guidelines which say time of supply. They have a specific set of guidelines, isn't it? So as per the time of supply, whether the transaction is being recorded as per that time of supply or not, you need to do the establishment. Then comes the classification, whether P&L item has been recorded in the P&L or not, whether a balance sheet item has been recorded in the balance sheet or not. This is what is the 5 basic checks that you can do against a profit and loss item. That becomes your classes of transactions and events. These checks, if you do, you will have a guarantee that the accounting entry that was posted is correct. So any transaction that you are checking, any expense that you are checking, just have this in the back of the mind that this is what I need to check for. So when you do this analysis, if you start incorporating this analysis in everything that you are doing, then idu vandu ungalku mind la fix aidum. Okay, this is what I need to do. Every time I'm verifying something, this is what must come to my mind. So then it will be a easy ride for you. Now come to the account balances. Talk about the existence. Think of something like a fixed asset. How do you prove its existence? There are two ways in which you can do that. One is physical presence. For assets, all the assets need to be physically present somewhere, isn't it? They have to be physically there. Asset under the one, it needs to have a physical presence. If you're talking about an intangible asset, if it is a right, property right abdina, or a legal right or property right, there must be some documentation to that. For a lease abdina, there must be an agreement to that. There must be a contract to that. So existence proof பண்றது வந்து either it can be through the contract agreement, or for intangibles, or if it is a tangible asset, physical presence is the best proof that you can get to that, isn't it? Now think of the other side, the equity. How do you prove the existence of equity? There will be a shareholders agreement, there will be MOA, there will be a share certificate. All these basically become the existence, the proof of existence of equity in that entity. Think of a liability. Liability ke eppadi existence. Again, it is intangible, so there must be some document to it. Either a contract, an agreement, or a loan agreement, or a loan document. Something must be there, isn't it? So this is your existence. When it comes to inventory, what is the um, 1 second. When it comes to inventory, what is the existence that you can prove? Again, inventory is always a physical asset. Physical asset ku vandu there is a physical presence that is possible. So physical presence check panna, it becomes the existence. Sir, every time we cannot do the physical verification, so how do we come to a conclusion? Then it is the document that you need to rely on, whether for that inventory, whether there is a purchase invoice associated with that, whether the report, monthly closing report or something, is it showing this quantity in that report or not. This becomes your basis for that, proving that existence. Next comes your rights and obligations. This, just carefully remember, if you are giving an item like say, let's say lease itself, lease is the best example that you can think of. Think of lease. When you are saying lease, what is the proof that you have the right to that asset? What is the proof of ownership to that asset? And the document will tell you whether it is a finance lease or a operating lease. If it is an operating lease, you cannot record the asset, isn't it? You cannot record the asset in the books. You just need to record the liabilities in the books. But when it is a finance lease, what you need to do is you need to record the asset as well as the liabilities, and then treat the transactions or the accounting entries accordingly. So when you're talking about the rights and obligations, so best example would be the leases itself. So for you to establish whether you have the right or obligation to those economic, what do you call that? Economic benefit that you are deriving out of that asset, you need to refer to the base document that is there for that transaction. So in the case of lease, it is the lease agreement. Lease agreement will tell whether it is a finance lease or a operating lease. If it is a finance lease, you have the right as well as obligation towards the economic benefits derived out of that asset. But if it is an operating lease, you have only the right but no obligation. Okay. So based on this, you need to decide. Let's say you are making some investment. There are some investments in the balance sheet. Now, what proves the right and obligation for that? There must be some agreement, isn't it? If it is a share investment, there must be some share certificate issued by the other entity to this organization, and that gives the confidence that yes, these people are actually having the right to own that particular equity investment. Give a minute, I'll share the screen. Okay. So that is how you establish the rights and obligations. Come to the liability side. What is your right? What is your obligation? Right to receive the loan, right to use the amount is your obligation, right? Obligation is you are obliged to repay the principal, you are obliged to repay the interest on time. So that is your obligation. Next comes completeness. Again, completeness is with respect to the amount. When you are recording a fixed asset, you need to record it with tax or without tax. You want to claim the tax, input tax, or you want to capitalize the input tax. That is all is about the completeness. What amount are you recording it? Next comes the valuation and allocation. Valuation. If you're talking about the index based financials, most of the times you have to use the fair value concept. You need to you need to project the assets at their fair value or market value, isn't it? So when you're doing this fair value presentation, For inventory, we have this concept cost or NRV. What is lower, cost or net realizable value? So based on that, whether the inventory has been valued or not. Let's say an investment வந்து value fluctuations இருக்கும். At the end of the year, have you represented the correct market value or not? So all this stuff basically becomes your valuation and allocation. Coming to the liability side, is there a requirement for valuation or allocation அப்படின்னா there is a requirement for this in provisions. Provisions வந்து the provision create பண்றது வந்து there must be some logical basis to it. Currently, there is something called as expected credit losses. IFRS 9 ல வந்து they talk about this expected credit losses. Ind AS, I'm not sure what is the number. IFRS ல வந்து they talk about this expected credit losses. Every year, நம்ம இதுக்கு முன்னாடி வந்து பேட் டெட்ஸ் ஒரு பெர்சன்டேஜ் கொடுத்துட்டு இருந்தாங்க. இட் வாஸ் சிம்பிள் கான்செப்ட். பட் இப்போ என்ன சொல்றாங்கன்னா you cannot just like that allocate bad debts. There must be a strong basis. You need to understand the customer. You need to understand the pattern in which the revenues are generated from that customer. You need to assess. You need to have a back workings to establish that this customer is going to go bad because of so and so reasons. So based on this, every customer has to be allocated some percentage of bad debt. They have given one big standard. So that is expected credit losses. So based on that, you need to create a provision towards the possible bad debts, or talk about some other provisions where you need to create a provision for let's say any legal liability or a legal case that is pending. You're not sure whether it is going to be won or not. So even the lawyers are not very confident about it. So all those cases where the value is questionable, that is where you need to look into the valuation and allocation. Next, with respect to the presentation and disclosure, this is mostly something that we don't generally need to check, because presentation and disclosure only at the reporting level you need to really worry about it. Only when you're doing the financial statements, that is when you need to worry about it. And that is mostly these days driven by software. So this area is not much of relevance. But when you're carrying out any accounting entry verification or any verification with respect to any balance sheet or anything, have these things in mind. When you have these things in mind, it will at least help you. It will guide you as to what can be done about that. If not, whether you're doing it right or wrong, it is a different matter. But at least you can have some confidence that I've done something about this transaction. I've verified these details. Okay. From this, if there is any deviation, that becomes your observation. From this, if you identify any deviation, try to establish the same deviation to other aspects or to other accounting entries also. If the same thing is repeating, then it becomes your observation. If not, if it is a one-off, then check if it is material. If it is material, then just record it as an observation. Okay, so the rest of the things we will cover in SA 500. So let's come to SA 320. So basically, we have come back to the same concept of materiality. There is a specific standard which is helping us understand what exactly is materiality. There are two stages they talk about. One is for planning and one is for performing. Materiality in planning and performing audit. So At the planning stage, you may have one materiality level in mind and you may design your audit procedures based on that. But when you go to the ground reality, you may see the transactions and you may realize you need to modify that materiality, or you need to modify that materiality based on the item that of the financial statement that you are auditing. So that is the reason they have split this in the heading itself. One is materiality in planning and the next one is materiality during performing the audit. Okay. No, the very first thing that we all need to understand is that materiality என்றது வந்து it is always subjective. நான் ஒரு வேர்ட் சொன்னேன், பிக் அப்படின்னு. பிக் என்றது வந்து how big is big? Large, small, high, low. How low is low? How high is high? This high என்றது வந்து each one of us will have a different definition for high, different number for high. If I ask you to say high, each one of you might give a different number. Okay. If I ask you to say low, each one of you might think of a different number. So when you're talking about materiality, please understand we are all like humans only, and we as a professional also, we have our own logic and we have our own analysis of the things. So we will have our own materiality levels, but as per the industry standard you should be somewhere close to it. But based on your professional judgment, since you are the person doing the audit or conducting the audit, it is upon the chartered accountant to come or decide or agree upon a particular materiality level. Okay. So the very first thing that you need to note is materiality is subject to professional judgment. That is fixed. It is subject to the professional judgment of the particular auditor. Now, next thing they say is financial reporting framework. That is the general guidances that you have around you, or the audit reports that the financial statements that the organization has given. They generally discuss what is the materiality level that they have considered or what they have established. So in that case, here if you see, financial reporting frameworks often discuss the concept of materiality in the context of preparation and presentation of financial statements. Although financial reporting frameworks may discuss materiality in different terms, they generally explain that this is what is the guidance notes generally say about materiality. Misstatements are material. See, again, the word material, the word big, the word low, it is always subjective. Adanala, they're just giving a guideline as to understand how to consider something as material. If you cannot define the word material itself, you try to define the factors around that material so that you get to define some number to that material. First one, how do you identify whether it is material or not? First thing, misstatements are material if expected to influence the economic decision of users. taken on basis of the financial statements. So if you believe that a particular set of users might be affected by the number in this particular line item, then it becomes material, is what they are saying. It could be individual or aggregate. This is what is very important. It could be individual or it could be aggregate. Every single transaction, I have seen one place where the sales the accounting and the invoice don't match. Why? Because invoice they don't have the option of showing the decimals. The funny part is they don't have the option of showing the decimals only. Now what happens is when they are accounting, they account based on the actual cost, their valuations, they have some number defined in the software, everything. They do the accounting, the software automates the sales entries, everything. Now sales entry says for 104.9, but in the invoice it will be only 104. Now how much will the customer pay? Obviously he'll pay only 104, right? Now this is something that is, when you look at it, it is 90 paise. 90 paise is okay, it's not a big deal. Okay, one transactions they have lost 90 paise, it's fine. Every single transaction you're losing paise, over a period of time it will accumulate, right? It will become a significant amount, isn't it? So if you're talking about something like 10,000 transactions, 10,000 sale transactions per year, obviously it accumulates up to something like 10,000 into zero point 0.9. How much is that? Two decimals you remove, it becomes 900 rupees. 900 rupees is a good amount. So this you are losing out because of the mistake in the way the invoice is being printed. And then there is a second thing to this. There is also a tax repercussion on this, isn't it? So individually it is not material. 0.9, 0.2, 0.1, 0.6, all this is fine. But when you're talking about a high number of sales transaction, something like a FMCG market, every single product that you are selling, if you are losing fills on the paise on it, then obviously it's a big risk for them. Something like supermarkets, just imagine every single supermarket, every single product that they are selling, if they lose 10 fills, 10 paise, 20 paise, 30 paise on that, then it's a significant loss at the end of the day and at the end of the month, because they have more number of products and lower prices, isn't it? So individually it may not be material, but aggregate it could become a significant amount. So what they are saying is misstatements are material, mistakes, omissions, or either by mistake or wantedly, if you are committed that mistake also, it becomes material if it is affecting the economic decision making of the users. So your end users are taking some economic decisions based on your audit report. So if it is going to influence their decision making, then they are saying consider it as a material level. Okay, if you believe this is not going to impact the end users, then don't ignore it. It is not material. That is one of the guidelines they are giving. Second point, judgments about materiality are affected by the size or nature of a misstatement. Naturally, where the misstatement has happened is also a point to be considered. If it is happening in something like assets or cash or assets, basically, it generally has a significant impact because you are wiping off the assets, isn't it? But if you are talking about something like liability, you can slightly be okay about it, because liability ila enna ho, even if you record inappropriately, the other person will come and say, no, 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 this is wrong, isn't it? So depending upon the nature, and second thing, depending upon the size. Size is what I have been referring to since the start. let's say 5% of sales, 10% of assets. It could be a generalized measurement like this. So it could give you a number. It could help you give a number to that materiality level applicable for that organization. Third one, judgments about matter that are material are based on a consideration of the common financial information needs of the users as a group. Now, this is something that has been recently coming up. All these years, whenever you talk about the financial statements, you only think of the investors, people who are investing. But nowadays, they are saying it is not just investors. There are a lot of people who are really interested in the financial statements of the companies all around the world. Let's say a person who is very environmentally friendly. Now, during that environmental friendly campaigns that the organization has done, they have said they have campaigned that we will plant 10,000 trees. But they were not able to plant that, but they have recorded all the provisions, everything. They have done all the accounting, everything, but they have not actually achieved anything of that, or they have not achieved a significant portion of that. Now this becomes material, even though from a company's perspective, company, let us say it is a manufacturing unit. From the operations perspective, does it really require? Whether you plant trees or not, is it really required for the operations? No. Operations is doing its work, operations is earning its profit. This was something that was supposed to be in the free time, or some other organization should be the one actually doing it. Now, even though this is not relevant to the actual economic activity of the organization, there are some people who are interested in the environmental interest of this organization. So they will start coming up saying, you have promised so much, but you have not done actually anything and all. So they say, even if there is a small group of users who are very particularly interested in certain aspects of the organization, if you think it is having a significant impact for those particular users, also try to report it as, or try to consider it as a materiality. You should not ignore the needs of the small users or small group of users. You should give adequate importance to every single user of the financial statements. So first thing, if you believe the financial user's economic decision is going to be affected, consider it as material. If you believe it is going to affect even a small group of those financial information users, then even then consider it as material. And finally, or regularly, anyways, you will consider the size and nature of the transactions to arrive at the materiality. These are the three parameters that the frameworks are generally giving for you to establish the concept of materiality. And by default, in spite of all of this discussion, materiality is always a number. 10,000 rupees, 20,000 rupees, 5,000 rupees, 500 rupees. This is what is ultimately the materiality. You need to arrive at that number, but arriving at that number, it's not easy. You cannot just say, take, okay, this percentage. You cannot say it like that, because there are a lot of factors around it. That is why they are defining the factors and not materiality itself. If you see, all these three, they are not defining the materiality, they are just defining you to establish the factors around the materiality. If you define that, at least this way you can figure out what is the material level for that particular organization. And please remember, this is individually or in aggregate. It could be a small thing, kutti kuttiya, konja konjama, it will aggregate up to something material. And for this, I remember one very interesting fraud that happened in US somewhere in the 1990s, around that time. There was this one particular guy who was asked to do coding for a bank. What he has done is, After completing the coding, everything, suddenly he got an idea and thought, why not I transfer balances to my account? Okay. And he started transferring very minor amounts, very minor. So minor that it was actually something around this number. Huh? Once again, be online. Okay. So it was literally this number. He was transferring amounts somewhere around this number. So every single transaction that is happening in the bank, I think it was somewhere around 10 digits or something. For every single transaction happening in the bank, this amount will be credited to his bank account. Every single transaction happening in the bank. Just imagine. Individually, does it even look material? It is nothing. It is absolutely nothing. But just imagine, a bank goes through millions of transactions per day, isn't it? Even back in the days, it was this particular fraud happened in a very significantly large bank. So just imagine every single transaction that is happening in that organization. This bloody guy is getting this amount in his bank account. So it kept on accumulating. In within a very short span of time, he started making millions. He started making millions. So individually, it is not looking significant. It is looking like nothing. But aggregate, here it is a risky factor. Aggregate is the risky factor. Okay. So that is what the materiality says. Either individually or in aggregate, if something is getting risky, then be careful. Okay. So next is, let's see here. Uh, Please note this point also. The auditor's determination of materiality is a matter of professional judgment. It is up to the auditor to decide the materiality level. Everyone will leave it up to his professional judgment. So what are the factors for the professional judgment? They have given a lot of factors, but it is not very important. So that's fine. So here again, they reiterate that the concept of materiality is applied by the auditor both in the planning stage and the performing stage. At the time of planning, you will have one number in mind and you will try to utilize that number for your plans. But at the time of actually performing the audit, you may come across some information or you may come across some transactions where you need to revise the materiality level. Okay. So basically, if there is some fraud identified, then you may actually have to ignore the materiality level completely, because I had once seen one scenario where there was a fraud that was happening. Uh, the transactions were like extremely random amounts. Okay, the amounts were completely random, so random that when you look at it, you may feel that yeah, it's a regular number that we are looking at. Okay, but in fact, when we added up all those numbers, it was exactly equal to 1,50,000. It was some 15, 20 random transactions, and only those transactions we did not get the documentary evidence. But just like that, we at the end we were just doing this reconciliation and we just put one total just to see. Suddenly we were shocked when we looked at that number because it was exactly 1,50,000, and we were like, this cannot be a coincidence. It is something is wrong in this. And when we went, we realized, yes, this is a bribe paid to someone. They didn't want to show it as 1,50,000 because it will be very obvious. So they had put it as different expense transactions throughout the year. Now these things are something where you need to ignore the materiality level. So based on the situation, based on the thing, it is always a professional judgment of the auditor to establish a number to the materiality. It could be high, it could be low, it could be changed, it could be increased, it could be decreased, depending upon various things like size, nature, the item, everything. Okay. So that is with respect to the introduction to the materiality standard. We have some other aspects to discuss with respect to this. We will take it up in the next class. Okay. Have a great day and enjoy your Thursday. Thank you, everyone.
Thank you, sir.
Thank you.